Headline: JP Morgan quants warn of dot-com style concentration in US stocks. Shares of top 10 stocks are nearing historical 2000 peak. And welcome back, everyone. I want to share some thoughts on this. I'm old enough to live through the dot-com bubble and the '08 financial crisis. If you don't know, I'm pushing 50. And I've seen this game played before. That's why I always call this stuff out. Whereas the young kids on YouTube in the 20s, stuff like that, they wouldn't know, because this is stuff happening before they were born. However, you can just look at the numbers like JP Morgan and sort of see what's going on. So basically, we've had this thing called the Magnificent Seven tech stocks. You guys know what we're talking about here. And they've gone up like crazy. However, not all of the market has participated in this last rally this past year. This is saying here only 4 sectors are represented in the top 10 compared to the historical median of 6, meaning again, it's not every sector. Moreover, this was actually a really interesting chart. The blue line here is basically comparing the mega caps, the top 10, compared to the rest of the market. And again, it is outperforming by leaps and bounds, and it's a bit unhealthy. Moreover, my personal opinion on this stuff is I think some of these companies are legitimate companies. So I'll just use Tesla as an example because it's always fun to talk about that. I think Tesla is a legitimate company. They make products. People buy it. Yes, they're profitable. Yes. But you can pay too much for a stock. That is possible. I know the pumpers will tell you, no, any price is good. Just keep buying. But you can overpay for something. I'm going to use the example of Intel. And guys, please take a look at a chart for yourself when you have time. This is over at Google Finance. You can see it peaked out in 2000 and has actually never recovered, which is really interesting. So I think some companies will end up being like that. Tesla being one of them. That's my opinion on these things. So it'll peak out, take a fall, and maybe never recover. Also, too, you may have something like this. Dogecoin, which is the dog currency, was a real thing. We're going to look back in history and be like, okay, were people really buying these dog coins, and was there really a CEO that was actually pumping this thing? And it's going to be laughable in history. Moreover, there's going to be a lot of companies that you will forget about. And I'm pointing this one out because it was funny. I remember I knew this was a scam from the beginning. It wasn't hard to see. This is Mullen Automotive. I mean, all you had to do was visit the website, and the website looked really crappy. The founder looked like a sleazy guy. You watch one interview, you're like, yep, that's definitely a scam. And the funniest thing, the reason why I'm showing this one is if you look at the max chart over in Google Finance, it says down negative 100%, but it's not quite yet zero. I think the point is when you get to 99.9999999, you just round it up to 100. But there is still a little bit of money in this thing, but I think some of these companies are going to disappear and never come back. So some will, maybe be like an Intel thing. It'll take a long time to come back. Some will be laughable in the future, and some will never come back. There's something like a Mullen Automotive, and they'll disappear, and they'll turn to be some crimes or something like that. Moreover, some of the tech companies are trying to sell you these crazy gadgets that I think few people are going to buy. Regarding that, Apple, this is Apple Vision Pro. It was interesting. The reviews just came out, so I think the embargo was lifted. So I saw several reviews out there. This is one from the Wall Street Journal. I took a look at the review. I'll give you a basic gist of it. You scan your face with the headset, and then it creates like an avatar for you. So that technology, the technology itself is cool, but it's a little bit weird. And all 3 of the reviewers are saying it's just a little bit weird. Moreover, they were also saying that the headset is heavy. Everyone said that it was heavy, so it's not practical. Maybe you could wear it for like an hour or so. It's heavy and it's expensive, $3,500. The only thing that honestly, which I was really thought was really cool, but I mean, cool is one thing, but am I actually going to use it? Maybe not. Was cooking. You can put a timer over your food. So you're wearing the goggles and you're going to cook with your goggles on, and you can put a timer over your food. I thought that was pretty cool, pretty frank. But the thing is, the headset's heavy. She said when she was cooking, she can't tell if the pepper's really on there or not because you don't have good vision through that thing. And then you couldn't read any of the labels or anything like that. So it's not practical now. But people also said it is cool to watch 3D movies in this thing. And yeah, if you want to watch movies by yourself, and I think that's a key point because for me, just for example, when I'm at home and I'm watching a movie, I like to sit on the couch and, drink, eat, these kind of things. Function along with spend time with my wife, with someone else, another person. Some people may like being in this thing, but probably not for me. The other thing too, which I really want to mention, there are more layoffs. So first we talked about the market being a little bit overweight towards tech. Now we're talking about cuts in jobs. It's not just tech that are cutting jobs. Actually, UPS announced, was it 12,000 jobs? That's actually really a lot. Moreover, it was part of management, and this is something that they're saying here. They're saying after registering 9.3% drop in annual sales, again, this is UPS, they're saying this year is only going to be a 1.1% growth perhaps, right? So not so great. Soft demand in Europe and the US led to overall decline of 7.5% in the fourth quarter delivery volumes. So you have high labor cost and lower package demand. I mean, that's a formula for not great, time to cut back. Moreover, they are not alone. It's not just UPS. PayPal is also cutting jobs. So they're cutting 2,500 jobs. And it's the same thing you're going to hear in tech. It just, things are slowing down. PayPal in particular, they have more competition, as what they were saying, which is interesting. And, I don't really use PayPal that much. I do know PayPal is part of Venmo, but I'm just telling you guys, I just don't use that much. But I'm sure there are businesses out there that still do. I think eBay, maybe Etsy, these kind of things. And if you're in the US, maybe you're using Venmo all the time. But my understanding is Venmo is free. You guys can correct me if I'm wrong. So I don't quite see, how can I say? I don't think PayPal is a requirement in this world. There's no guarantee this one's going to last. So I'll be curious if you guys disagree with that. Moreover, Jack Dorsey, so he's over at Block, which used to be Square. Now, this is an interesting one. I remember, and they say they're basically going to cut jobs to try to get to 12,000 staff. But I remember when I saw Square for the first time, they were all over LA, and essentially all the small mom and pop stores had it to where you could do transactions. I thought it was really cool technology. I'm just telling you the truth. Here in Korea, we probably have about 4 or 5 different companies that do roughly the same thing. And I think it's going to be a real fight for these, kind of fintech companies. So, not all of them are going to last. And again, it looks like many probably overhired, expecting growth to be forever and expected to monopolize, the sector. But it's easy to replicate this kind of company, evidently, because there's a lot of rivals popping up. Now, in terms of the mega caps, again, the question is, are we facing a .com style crash? I looked at the Microsoft earnings report, which came out today. I looked at Google. Here's the interesting thing. So when you read through this stuff, no one really wants to say, hey, it looks like everything's overvalued. I mean, no one really wants to say that. I'll just tell you, it looks like everything's overvalued to me. But much of our market is driven by hype. But if you look at Google's earnings report, you look at Microsoft's earnings report, it's all about, okay, who's going to have the best AI? That is literally what people are looking for. Who's got the coolest AI, etc. Now, Microsoft and Google make money. Make no mistake, they make money. So it's not a question of whether or not Microsoft's a good company. It's not a question of whether or not Google's a good company, or Alphabet's a better way to say it. But they're good companies, guys. They make money. But we've seen layoffs. Both of these companies are trying to trim costs because, again, just the growth estimates aren't coming in like they were. Moreover, if you actually look at, CNBC does this every time that Microsoft comes out. I wish they would do it for every company because it's actually really interesting to look at. This is the chart. You can kind of see where things are growing in terms of, revenue, I guess, and then where things are not growing so much. So here, Windows OEM is down 39%. Xbox is down. Windows Commercial is down. Office products are down. Your growth is actually your cloud, your Azure, and then, as they say, server products plus and cloud services. And essentially, everyone's looking for the next hottest thing, and that's probably going to be AI. If you believe that's going to indeed make a lot of money, because that's sort of the question that came up. I want to say it was either Microsoft or Google's. I just don't remember which one. But people were saying, we can see you're doing R&D and this kind of stuff, but when are you actually going to be profitable in these things? And you guys can believe whatever you want in this stuff. I've said the same thing over and over again regarding this AI stuff. It is not necessarily what people are hyping it up to be. Right now, the best AI out there, which is the OpenAI one, it just data scrapes other things and then compiles stuff for you. And you kind of lose out on, where this information is coming from. But it's not like this AI is a sentient being, which is sort of in the past when talking about, science fiction, these kind of things is sort of where we thought AI would be. It's not like that. It's just, for me, it's just a really, really how can I say, efficient? I don't know if efficient is the right word. We'll just say a different type of search engine. That's how I see AI at the moment. Now, the other way, which is also true, AI is a broad category. So, we talk about AI for accounting is going to be different, where it's something crunching numbers very quickly, or AI for photo, generation, these kind of things. Again, something different than search. It's a broad category, but again, I don't see it as being something like, the AI is going to be your personal assistant, who's your, sentient being that can, have relationships with, which we're just not quite there yet. So to me, it's still a lot of hype, but that's just my opinion on this stuff. There was one other news report which I want to mention as well, which is, I think it was an interesting one. This was Starbucks. And the basic gist of this one, which is related to what we saw in other companies. So Starbucks still makes money. They totally still make money. However, outside of the US, they're facing a lot more competition. And I can just tell you guys, when we were in Vietnam, there is a coffee place called Con Cafe. If you've ever been there, you would know exactly what it is. It is fantastic coffee, and if they ever, were able to compete in USA, they would really do well. I'm pretty sure Starbucks are trying to block them. If you haven't had Vietnamese coffee before, go down to your local store if you can. Whole Foods has it. I don't work for Whole Foods or Vietnam or anything like that. I'm just telling you, just give it a try. Coconut coffee is fantastic. It's just a different style of coffee. And Starbucks is just facing competition. In China, they mentioned that there's a lot of coffee places that are offering lower prices. It's the same here in Korea. Like, everyone's advertising $1 Americano. It's everywhere. So it makes it hard to sell that $7 cup of coffee when you get something less. I understand Americano is not the same as a latte or mocha. I get that, but the prices are much less. And moreover, if talking about in terms of Starbucks is competing on, okay, we're not going to win on price because you got these other really cheap ones. And when you go to these sort of mom and pop type coffee stores, at least around here, they got much higher quality of beans and processing and flavor, etc. So I think Starbucks is still popular. They have great locations. They essentially buy up some of the best real estate around, and they got some nice looking interiors, and they make a lot of money off merchandise. So that's where the mom and pop stores don't really do that. So there's people out there who collect Starbucks cups from every city. I don't think they're going to go away anytime soon. I just think the world is changing in terms of that. So that's just my opinion. I just want to show you that. And I'd be curious your guys' thoughts as well, if you think Starbucks has a monopoly or you're kind of seeing what I've seen, that they're facing a lot more competition. Again, it's going to be like other sectors and other companies that we're seeing. So anyway, that's my thoughts on this stuff. Please be careful out there with the layoffs and the crazy valuations that we're seeing in the market. I personally expect a pullback. I'm going to do another video after this. I just saw headlines flash over that something crazy with Musk, with his salary or something like that. So give me time. I'll take a look at the stuff and put that out as soon as I can. So thanks again for watching, everyone, and I'll catch you next video.